There's a paradigm with paying taxes.
While none of us are eager to pay any more to Uncle Sam than we need to, proper tax planning is critical so that your year-end decisions are proactive rather than reactive. Today, Jordan Steele with Ranch Management Consultants walks us through effective year-end planning and strategy.
Most ranchers don't love bookkeeping, right? If you can keep up with your monthly records, financial records, even statement by statement, you can walk into your tax preparer's office and have a good conversation about what's happened so far.
We'll go through 5 areas to understand in your ranch business that will help you strategically keep cash in the business, yet satisfy your tax obligations. Plus, a quick decision with Jordan on accounting software. Now, while we're at it, I'll bring in Adam Sweet with the accounting firm of Eide Bailey as we'll learn more about the Corporate Transparency Act.
The idea of the CTA was to force disclosure on a national level of entities and then also ultimately the individuals that own entities.
It's about year-end topics that affect your ranch business on this episode of the Working Ranch Radio Show. And welcome to the Working Ranch Radio Show. I'm Justin Mills. Thanks for joining us here on the program today. This is episode 193. Just in case you missed the previous 192, I encourage you to go to our podcast website at workingranchradio.com, and you can find all of the episodes that we have aired in the last several of years. We are approaching total downloads for the entire lifetime of the program, Working Ranch Radio Show in general, getting close to 1 million total downloads. And we appreciate everybody that's tuned in over the many years of the life of the Working Ranch Radio Show. Now, speaking of programs, I encourage you to go back. We've had some really great shows here as of late. Last week, Jess Peterson with U.S. Cattlemen's Association joining us as we talked about the cabinet picks and ranch issues that are back in Washington, D.C., and what the prospects look like for those issues with a new administration. So I encourage you to go back and listen to that. Alan Crockett joined us before that, talking about the Foundation for Success as a next-gen rancher. And so some really great shows that we've had. Encourage you to go to those and listen to them when you have an opportunity. But again, thanks for joining us here on today's program. Year-end tax planning. Yeah, that's what we're talking about here today. Jordan Steele, as you heard there in the opening, joining us here on the program to talk about that. In addition, we're also going to be touching on the topic of the Corporate Transparency Act. It's a kind of a hot button topic right now with the needing to get those forms filled out before end of year. But there's also some legal issues now that could encumber the need to have to do that, but we'll talk all about that later on in the program as well, so be sure to tune in on today's program. Also joining us later on in the show, the Captain Tim O'Byrne, editor of Working Ranch Magazine, will be in for this week's edition of Tim's Two Cents, and we'll hear from meteorologist Don Day with a look at that long-term weather and also some new information coming out as far as what it could be looking like for January and February as well, so tune in later on in the program for meteorologist Don Day. But back to our subject at hand here today. Joining us on the program today is Jordan Steele. He's Director of Operations at Ranch Management Consultants, also known as the Ranching for Profit Schools, and instructor there as well. And Jordan, thanks for joining us here today on the Working Ranch Radio Show.
Thanks, Justin. It's good to be here.
Well, we won't chit-chat too long here about the personal side of things, but both you and I were kind of raised in the same part of Wyoming, northeastern part of Wyoming, and kind of roundabout ways back here together on this program here today.
Yeah, yes, it is. It's a small world once we get out here, isn't it?
Yeah. Well, you just finishing up a school in Phoenix and going to be headed to another one later on in the show. Before we leave, I do want you to kind of hit a little bit about some of the upcoming schools that coming up after the first of the year, but we'll get into that later. Because as we are at this time of the year and looking at, we're just a few weeks out from turning over another calendar year, it does require us to be diligent in our fiscal management and looking at how we can prepare to, handle the situation we are at financially into this time of the year and also looking ahead. And one of the things, as I was reading an article that you had written about in regards to 3 issues to look at when it comes to money, sometimes we kind of clog up some of these financial terms interchangeably. And when we talk about the economics, finance, and income tax, we just kind of throw it all in one big lump sum. But it is 3 different things.
Yes, absolutely. So the way we work with those three terms at the Ranching for Profit School is, economics is producing value, and that's first and foremost when we make decisions. Is we need to make sure we produce value and keep profit, and then when it comes to finance, we need to make sure we're looking at our cash flow and paying bills on time, and then what do we do with our excess cash flow after that too. And then last, we're going to have to deal with the tax liabilities, and that's one thing that is awful daunting for most people, but it can actually be a joyful experience once you get used to it.
Mm-hmm. I think one of the things that we get into is that there's this need that we need to, when we have a year, maybe like these last couple of years, maybe this coming year, depending on, not speaking for everybody, where these calf prices are a little higher, dealing with definitely more revenue, that we just get into a mindset, well, we need to go buy something. And sometimes paying taxes isn't necessarily a bad thing, but properly managing your finances so you can lower those is really the key.
Yes, absolutely. So that's the whole tax planning part of it. And like you said, there's a paradigm with paying taxes. And so that's why with agriculture, we have so many options that we can change years of income and work with that. So being willing to pay some tax and then being willing to pay it in different years, like you said, over the last couple of years, maybe we want to pay some debt off, or maybe we want to go buy some more cows, something like that.
Mm-hmm. Let's specifically talk just a bit about year-end tax planning, and probably a lot of folks, when it comes to ranching or businesses, you have an accountant that's helping you with that. And just talk about what your thoughts are as far as how important it is to get those meetings, sit down with them, and go over those books.
Yeah, absolutely critical. Very important, because most ranchers don't love bookkeeping, right? That's not in why we got in the business. But if you can keep up with your monthly records, financial records, even statement by statement, you can walk into your tax preparer's office and have a good conversation about what's happened so far. What we see too common is that everyone puts that job off, and then all of a sudden now it's the middle of December and we got to trudge through 10 months of bank statements. And it's kind of hard to remember what went on last summer and last spring when we get into all those financial transactions. So keeping up on the books and knowing what happens will set you up for success in that meeting.
Yeah, and I gotta admit, Jordan, a little bit, I can be guilty of that sometimes. Maybe not far as 10 months out, but you just kind of get into those busy times of the year and you don't get the month-end reconciliation done like you should. Here's a question that doesn't really have anything to do with the article that you wrote here, but it's something I've thought about a little bit. Is, do you think a January to December year in your books is the best, or is there a different time frame, maybe October 1 to September? I don't know. I really throw that out there because it's something that I've pondered, wondering, is there a better 12-month period that we should throw our books into than the normal just calendar year?
Yeah, so I think what you're asking about is do I have managerial books and do I have tax books?
Mm-hmm.
Not necessarily two different sets of books, but just how do I analyze my own records? And I would totally agree with that. So when we do our stock flow plans at the school, we'll actually set you up. If a calendar year doesn't work, maybe for some fall calvers, if they're calving in September, let's start your first of the year, the 1st of August, right? So we kind of match your production year. Or if you're in more of a grass-based area, let's set your month up the 1st of March when everything starts coming in April. So you can match your production year, and then you don't have to have those goofy inventory adjustments with all the extra cattle around. I'd totally be on board with that.
Yeah. And I guess what put me into that mindset of thinking about that, Jordan, was as we migrated, and we've been calving cows, our main set of cows, May and June calving. We've been doing that for several years. But when that migration happened, it also moved when, like right now is kind of when we're selling calves, and you're kind of, sometimes I feel like we're forced into selling them maybe a little bit earlier than we should, and not being able to utilize and market when we should. Now, again, some of that could go back to what we're going to talk about later in the financing side of things. But you see where I'm getting at on that?
Yep, I sure do. I absolutely do. So as far as tax wise, though, you'd have to be a C corporation to set up a fiscal year.
Okay.
And maybe that was a different question.
No, that's a good clarification, because that was what, that's not something I was thinking of. And that was the kind of part of why I threw the question out there is what don't I know that you're aware of why I wouldn't do that?
So if you want to do a legal entity with a fiscal year, it needs to be in a C corporation for a new startup. And then you get to pick those. You can pick your month of beginning and end on that.
Okay.
Otherwise, most of the entities just default to a calendar year.
Yeah.
And most of our personal ones default to a calendar year too.
Okay. Well, that makes sense. And that would explain why I don't really see a lot of people doing it. There are a few that I know that do have year ends at different times of the year.
Yep.
And that would explain it.
Yep. And there are a lot of old C corps floating around on ranches. This is a little off topic, but we make the best decisions with the knowledge we have on hand, right? And in the 60s, 70s, and early 80s, the C corporation was the best entity to run a business in. And now it's probably not. I mean, they're all dependents specific to your operation, but there's a lot of C corps that are old and still use them. And so that's where some of those calendar years come in.
Okay. That would make sense. And that exactly is what I have seen is some of the older ranch, sometimes these fourth, fifth generation ranches that were set up years ago and some of that kind of thing. So yeah, that would make complete sense on that. So, all right, Jordan, let's take a quick break here. And when we come back, I want to get a little bit further. Okay. We've went through some of this stuff, getting ready, meeting with our accountant on those kinds of things. And then after we've looked at those books, how do we look at that and manage the information that we have from there? I want to talk about that in our upcoming segment.
Sounds good.
Well, this segment today brought to you by Safety Zone Calf Catcher, and here's the captain, Tim O'Byrne, with more.
Hey everybody, Tim here. We're fixing to come up on 1 million downloads of our Working Ranch radio show podcast, which is really exciting. And it got me to thinking about another viral moment that we had back in 2017 when we ran a short Facebook video of the Safety Zone Calf Catchers. And it was so popular, it got 6.8 million views in the first 5 days. I want you folks to check it out, Safety Zone Calf Catchers. It's a great product for all producers. Keep you safe when you're working with baby calves, especially for old timers like me who maybe can't outrun those cows anymore. Check them out, Safety Zone Calf Catchers.
Calving season is a favorite time of year, but along with that special time are dangers, extra stress, and increased labor. Safety Zone Calf Catchers are all about safety and making processing new calves easier. Designed for ATVs or UTVs, one person can do the job and never be threatened by the protective mother cow. Make this and every calving season safer and easier with a Safety Zone Calf Catcher. Watch videos and customer testimonials or order yours today at safetyzonecalfcatchers.com or call 877-505-0914. Affordable and made in the USA. Make your upcoming and all future calving seasons safer, easier, and stress-free. Durable and designed to work anywhere you can drive your ATV or UTV. Order online at safetyzonecalfcatchers.com or call 877-505-0914 today.
Quick shout out to Jim and Trish Williams there at Cowpuncher Coffee. If you've listened for some time here on the program, you know that's who's the one's responsible for keeping me caffeinated each and every morning. And I was just thinking the other day, as we are heading into this holiday season and you're thinking of different gift ideas for somebody, have you thought about maybe introducing them to a great brand of coffee, Cowpuncher Coffee? Of course, you can find all of the different varieties that they have if you go to their website. And if you're not quite sure, they do have a variety pack as well that you can pick from there. Go to their website at cowpunchercoffee.com and check them out. Grab a mug. Let's spur the day with Cowpuncher Coffee. Well, as we get back to our program today, joining us on the program is Jordan Steele, Director of Operations for Ranch Management Consultants, which is also AKA Ranching for Profit, if you've heard about that. And we, of course, we've had Dallas Mount, who's the CEO of Ranch Management Consultants, on in many cases, and glad to have Jordan joining us here today as we find ourselves just a few weeks out from the end of the year and just preparing for that, sitting down, as Jordan was saying in the first segment, with our accountant, our tax preparer, and looking at these books. And now, Jordan, we've looked at the books. We've got a financial picture of what things are looking like. So what's the next step?
Sure. So when we look at the status quo, or kind of what has happened and what is for sure going to happen by the end of the year, we want to look at what's your tax bill there. What's your taxable income? Is it going to be, do you have to pay some in, or what else are we missing? I like to balance the whole. It's all connected, because we want to focus on the ranch books too, but there's going to be other non-farm income in there too. So we want to balance everything in there. And that might change what we do on the ranch too, depending on other income. So we want to make sure we look at that whole system there.
And that's something that just in the last 2 years I have able to be doing with my tax accountant is now bringing in. We used to kind of keep things really separated, and we still do. I mean, I got ranch books, and then we have our home household stuff, and then another LLC that I have as well. But at the same time, that all kind of coming together with one preparer is nice. It's expensive, but it's good because you do get that clear picture of everything that's going to affect you personally.
Yep, that's right. Because the tax bill generally all rolls downhill to you on the individual side. So it's like you said, if your preparer has all those together, it simplifies things for them. And like I said, most likely it's easier to see the big picture for you guys too.
Okay, so now we've done that. We've kind of looked at this. We've thrown it all together. We're looking at it. Now we need to start running some scenarios of some different things we should consider doing or could happen. Where do we start with that?
So the first one I go to is I call it prepays and delays, and that's the term I used in the Profit Tips article. But we're basically all cash basis tax preparers. Mm-hmm. So the timing of the sale and the expense is when we actually use the taxable event, right? So if you're carrying your steers forward, if you've got plenty of income and you've got a good place to go with your steers in January, let's just feed them a couple extra weeks and roll them into January. If as long as we're profitable mm-hmm. and the timing doesn't matter, then yeah, let's absolutely look at that. So that's an income example. Grain farmers have it a little easier to defer contracts and stuff like that than cattle. But the other thing to do would be looking at more expenses, right? So do we want to prepay some feed or prepay some crop inputs or something like that? So that timing of expenses and incomes is really critical.
Mm-hmm. You talked about prepaying some of those costs that we know we're going to have the next year. You mentioned a couple examples, some fuel, some feed. What else have you seen that's been wise prepaid costs or expenses?
I think those are probably the main ones. Feed, fuel, and then crop inputs. Man, some of those, if you're a heavy farming, some of those seed dealers and fertilizer dealers, some of those are just really good deals. And so that's what we call good for business and good for taxes, right?
Yeah.
I mean, if you're gonna cheapen up your inputs and they're gonna finance you cheap, that one to me worked for sure.
Yeah, that makes sense. And something that I kind of had to chuckle a little bit about here in this was it said depositing into your bank account on the first Monday after New Year's is not proper deferral.
Correct. Yeah. So that's the term the IRS uses is constructive receipt. And so if you're going to do deferrals, just make sure to do them right. The chance of an audit is very little, but as preparers, we can usually tell which ones were probably last year's income.
Okay.
So that's kind of the inside joke for tax preparers. When is a farmer the poorest? It's on the after Christmas.
Yes,
and when are they the richest? The first week of January, right?
Yep. Hey, I know we're all chuckling, and I know people are sitting in their pickups right now or whatever, and probably chuckling because they know exactly what we're talking about here.
Yep. That's right.
Okay, let's get to the next scenario that we can look at, and that is capital purchases and accelerated depreciation. And there's some things about that accelerated depreciation that we need to be aware of.
Yep, absolutely. So capital purchases, like new pickups or tractors or even bred cows fall into capital purchases because they're an asset, right? Mm-hmm. And accelerated depreciation. So most machinery and stuff like that is either going to be 5 or 7 year depreciation, but you have the option. There are some limits, so I'm speaking general here, but you have the option to write that whole asset off in this year. So if you go out and step out and buy a $80,000 pickup, if you need one, you can take that all this year. It works great when you buy assets out of profit mm-hmm. and you actually are like paying cash for them. Where I've seen people get in trouble is if they finance that vehicle or whatever And then we take all the depreciation in year one, because then your payments over the next few years are really not tax deductible. So you push that tax liability out in front of you, and you still have a cash payment to the bank every month. So those can cause problems out in the future.
Okay, and that's some really good advice too. And while we're talking about this, Jordan, in fact, I believe I even had Dallas on a year ago when we were talking about knowing we were going to be running into a year with higher calf prices and a lot more revenue for folks, and using that and spending that wisely. And one of the things since then I've really been bouncing in my head is you don't want to buy things in a way that's going to force you into a note down the road that you maybe won't be able to service when cow prices go back. But sometimes when these prices go up is the only time you can afford to do some of this. And you got to have a pickup to run. Doesn't necessarily have to be the newest and the nicest, but it's got to be functional.
Absolutely. And, I work with a lot of ranches, and I always tell them, I said, I'd rather see you drive one nice pickup than have 3 unreliable ones laying around the ranch, right?
I wish you'd have told me that about 5 years ago.
There you go. Yeah. So you need to have reliable machinery. No one's going to argue with that. But it's when we start buying the second and third tractors and stuff like that, that's where there may be a different ulterior motive to buying that machine.
Mm-hmm. Yeah.
So let's go back to bred cows though, because bred cows, we all know what the market's like right now. So I don't want you to just overspend or blow money on bred cows right now. But if there's a good buy on bred cows, once again, that's good for tax, good for business, because you can depreciate those bred cows. And if they give you a calf and maintain their value or increase in value, we can work with that the next couple of years too. So don't ever forget those.
Yeah. Okay. Now I'm going to put you on the spot just a little bit, and maybe it's not necessarily a financial number you're going to give me here, but what's a good buy on a bred cow when we're not sure where the market's going to be in 4 years?
Sure, I'd have to push you to Haskell and Wally and those guys on that.
Yeah.
So just knowing your price relationships between the different classes of animals. So I'd have to push you to that more.
Yeah, because I think I think you're right. Looking at those bred cows, and my thing is I always try to run these numbers out, just running on 100 head on 5 years and what that's going to look like out there. Of course, we don't know what the prices are going to be in 5 years, but that's just something I always try to do in looking at that.
Yep. And that's where it's fun to hang out with those guys too, because we're always focused on today's prices.
Yeah.
And so that's, like you said, you might keep that cow a couple years and then there'll be a new market that time, and we'll make a decision then with them. So if you're comfortable with that, it's okay to buy expensive bred cows, because when I go to sell her, the market will be different and we'll make a new decision then. And we get that tax advantage in the meantime.
Yeah. And speaking of Wally, I do have him. We've been working on getting him come on the show, because that was exactly the question I wanted to ask him on that. So, Jordan, let's take a quick break here, because we still got more scenarios to run through. Things like looking at inventory management, other incomes from other individual tax returns, and some other conversation we need to have as we're looking at year-end planning. We'll be back with more with Jordan Steele after this. This segment today brought to you by Barn Owl. It's what we use here on our ranch operations with 2 ranch locations. We want to keep an eye on things, and with our Barn Owl cameras, that's how we do it. I can keep an eye on a stock tank, kind of know what's going on there, if it's froze up or not, if I need to get out there, hay yards. Also, maybe it's a remote gate. You just want to make sure you don't have people going in and out of it, or a set of fuel tanks. Lots of uses for a remote camera, and it really is just about peace of mind. You can sleep a little bit better at night when you know what's going on out there. And if you want to build your off-grid camera system today, check them out. You can go to their website at barnowl.tech and find out more. They've also got specials running throughout this Christmas season as well. So check it out. Barn Owl Remote Cameras, their website, barnowl.tech. Are you tired of putting the wear and tear on your ranch pickup or your good side-by-side out checking stock tanks or reservoirs? Or maybe it's just keeping an eye on a remote ranch location. When you stop and you think about it and you start to calculate the cost of your time, fuel, and miles on your vehicles, you're going to scare yourself. But there really is a very simple and a reassuring solution, and it's called Barn Owl. Barn Owl off-grid cameras and smart alerts provide you that assurance, and there's no question it is a time and a money saver. From anywhere at any time, no Wi-Fi or power needed. Build your off-grid camera system today at barnowl.tech. Real-time awareness starts here. Always know with Barn Owl. Welcome back to the Working Ranch Radio Show. My guest today, Jordan Steele with Ranch Management Consultants or Ranching for Profit, as we've alluded to here at different times as well. And we were just talking a little bit about year-end planning with your tax accountant and looking at different scenarios after you know what your financials are, you know what the potential could be out there, and how do you handle that properly. We left off, Jordan, of course, talking about capital purchases and accelerated depreciation. Let's talk about inventory management.
You bet. So when I talk about inventory management, what I'm looking at is, is the ranch fully stocked? Did we carry over our steer calves last year into this year? If you're a grain farmer or a hay farmer, how much crop did you carry into this year compared to next year? If your inventory's down, as we turn that stuff into cash, your tax is going to show up that year. So if your inventory's down, I might encourage you, let's just wait. If you're not too concerned about the market, we never want to lose the market, but if it's okay to wait a month, that way we don't double up incomes in 1 year. You know what I mean?
Yeah.
Economic wise, they were produced in 2 different years, but if you sell them in the same year, that's when we trigger some tax problems.
Yeah. That's what has been sort of stemmed my question from before about fiscal years, is just finding myself not wanting to put 2 calf crops in 1 year. That's because that could be detrimental. As you and I were talking, I run a lot of lease cattle for other guys, and so that's something they don't really appreciate.
Right, exactly. That's a surprise.
Yeah. Okay, you had talked a little bit previously when we were talking about this about other individual tax returns. Maybe it's other incomes that we need to be aware of. Just real briefly on that.
Yeah. So when I talk about other incomes, maybe one spouse works in town and one's on the ranch. What I always look at is I'm going to look at the tax brackets, right? So there's actually 7 tax brackets. There's basically 3 stair steps. There's a 12, a 24, and a 36 in big round numbers. Mm-hmm. And so a lot of times I'm looking at, let's make sure we fill those bottom ones. And then if you're up in the next ones, let's see where we're at. And that's where we can use the other income, the ranch income, and compare those to brackets. And that's when then we get to choose on the prepays, the delays, and the inventory, right? So kind of high level picture on that, because we also want to know on the other incomes. Like I said, when we talk about tax brackets, we're usually just talking about those ordinary taxes. Mm-hmm. But as farmers and ranchers, you got to watch your self-employment tax, which is Social Security and Medicare. Mm-hmm. And then you also got to watch your capital gains. And capital gains is the lowest of the 3. So we just want to watch different incomes are going to be subject to different taxes.
Okay, you're getting into things that we don't think about. We just don't even go through, and that's very good advice on that. So, okay, and then last but not least, and that is looking ahead. I know we're looking back on last year and managing those incomes that could be there, but at the same time, as we were talking about a little bit on inventory management, is look ahead to next year.
Yep. And so that's kind of what I call the deferred tax. And like I said, as in agriculture, we get so many, I don't want to say loopholes because that's not the right word, but advantages or choices with taxes, to where depending on where you're at in your career, I'm totally good with deferring tax, right? Yeah. Like, let's keep the cash in your business working, and we'll worry about the taxes later. If you're older and you want to get your debt paid off, you might need to pay some more tax, right? So we can look at stage of business, cash flow, and because those decisions we make this year are going to change next year. So I'm good with deferring the tax, but I do want you to know how much tax you have deferred. Yeah. And an easy way to do that would just be, count up your inventory and multiply it by 30%. If you think you're going to be in the 12% tax bracket and 15% Social Security or something like that, just take a third of your inventory and that very well could be your deferred tax liability. So for big ranches, that could be a really big number. And it's just something to kind of have in the back of your head that we're going to have to chew through this eventually. Mm-hmm.
Yep. Good strategy, good thoughts to be thinking about through that. And as we wrap up sort of our conversation, really, it all just gets back to having that good plan with your accountant. And also, and I know some guys don't like to do this, but it's not a bad idea to loop your lender in the deal.
Absolutely. They're on your team. You know, we want to have a strong team on our business. We want to develop leadership to where you are the major decision maker. But yeah, we definitely want to loop our team in on that and make sure everyone's on board. So if you do run into where it's a better situation to pay some taxes this year, but you necessarily don't have the cash, you don't want to be calling your lender on April 14th asking for a short-term loan. But if you guys can get together months in advance and talk about it and talk about the pros and the cons of doing it, that'll put everyone's mind at ease.
Yeah, for sure. And I think it makes that bond and that relationship with that lender a little more trustworthy both ways. Then they feel like when you do call them up and say you found a good deal on a set of cows and it's a last minute deal, they're not afraid to lend you the money.
Exactly. Yep.
So
100%.
Okay, real quick, another question that kind of comes up. This has nothing to do with our main conversation today, other than it does with books. And a lot of folks I see out there, you know, QuickBooks is kind of what's always been the standard out there. What are you finding on software that's workable, I guess, or some options and things like that? What are you hearing?
Yep. So what I'm hearing, like I said, I'm familiar with QuickBooks Desktop and online. Everything I did at Kansas Farm Management, that's what I got used to. So you can call me the old guy here, but I'm very comfortable with it. So I don't see myself changing.
Yeah.
Like I said, you can call me the old guy there. But listening to a lot of people moving over to Ambrook, I think that one's going to take off. The thing I've heard best about Ambrook is they have exceptional customer service from what I've heard from everyone. You can get on the phone and talk to them and they'll get your bugs fixed, make sure your reports are looking right. So that's one option. Another option is Xero, Xero. I don't know much about it, but I've heard of a few other people using it. And then there's quite a few other softwares, smaller firm softwares that might not have the customer support or necessarily the IT behind it like QuickBooks does, but you have to work with QuickBooks to get it to work for your ranch too. Yeah. But those are good. Anything's better than a shoebox full of receipts and a spreadsheet. That's for sure.
Yeah. Is there any like ones like absolutely don't do this one because it's really not built for business?
You know, I don't think so. I think it's one of those things of repetition and practice makes perfect, right? So if you're gonna choose one, just stick with it and make sure it's giving you the results you want.
Yep. And also, again, back to meet with your, talk to your accountant, because I know that's one of the conversations I've had this last year is what works the best for them. Of course, most accountants are very familiar with QuickBooks, but it's gotten really expensive, as we all know.
Yep.
And
it's just that's right.
It's really tough to swallow that every year on that deal.
And that makes me bring up one other point too. You know, a lot of people are outsourcing their books.
Okay.
I'm totally cool with that. What I want you to do if you outsource your books though is, you know, this is that's a delegation, right? You're going to have someone help you do that, but you're going to review them and you're going to talk to them about it. You're not just pawning that work off and going to ignore it, right? So even if you outsource your books, you need to be involved with that process to make sure you're familiar with the reports coming back to you.
Yeah, that's a good point. And Jordan, that's something that I've thought about a little bit. I mean, some of the manual entry stuff, which if you're a little savvy on some of this, you can kind of quicken that up a bit. Not to use the word quicken necessarily. But you know what I mean? You can kind of set some things to quickly get to a year-end or a month-end reconciliation on those kinds of things. But you're right. I've thought to myself, we still got to have some reports that you look at every month that gives you a status of your company.
Yep, absolutely.
Yeah,
absolutely.
Okay, before we go here real quick, again, thanks for joining us, but I did want to have you mention, I know you're just finishing up in Phoenix and going to be in Abilene, Texas for a school, but also looking into the front end of the year, where are we at?
Yep, so you nailed it. We've got Texas coming up next week, and then we break for Christmas, and then we go to Colorado Springs, Billings. Well, we're going to host one in Wheatland in our hometown this year, Rapid City, and those are all in January. Mm-hmm. And then if someone wants to take a February getaway to Saskatoon, Saskatchewan, we're going there the first week of February. So those will be the next 5.
It's beautiful that time of year.
That's right. That's right.
All right. Well, for more information, the website real quick.
Just go to ranchingforprofit.com.
Okay. Well, Jordan, I appreciate you taking the time to do this. I know you're right in the middle of finishing up the school there, and thanks for joining us here today on the program.
Absolutely. Thanks for having me. It was my pleasure.
You bet. Again, Jordan Steele joining us here today on the program with Ranch Management Consultants, or the Ranching for Profit schools that we were talking about there at the very end. If you want more information, head to their website at ranchingforprofit.com. Now, while we are in the mode of talking about year-end business things that we should be doing, there's something that's been creating a little bit of stir, and that's the Corporate Transparency Act. Well, coming up in our next segment, we're going to be talking about that, not only about what you need to do regarding filing, but also there are some legal things going on with it as we speak. We'll talk about all of that coming up next. Welcome back. As I said at the very top of the program, we were going to get into and get a little bit more information and clarity on the Corporate Transparency Act. For a lot of ranch operations were formed in some sort of a corporate setup, and so this would apply in most cases. And so with that in mind, I thought none other than to call my accountant with Eide Bailey to see what they knew about that. And so joining us here today is Adam Sweet, who's a principal with Eide Bailey out of their National Tax Office. And Adam, thanks for joining us here today on the Working Ranch Radio Show.
Thanks, Justin, for having me.
Well, with the focus of our show here overall today, just looking at some year-end tax preparation and just year-end financial and business things that need to be done. One of those, of course, is in regards to the Corporate Transparency Act. And in fact, I had received some emails into our studio here of folks just saying, maybe wanting to know a little bit more about it. And so today, that's partly is to have you explain a little bit of what that is, what and why and who that would be for. But also, I know there's also been some more recent issues with that in terms of litigation. We'll get into that later. But first, let's talk about really what and why. Where did this come from? Back to 2021 is when this was passed, but at the same time, feels like everybody's not quite sure what this is all about.
Yeah, happy to. So it's called the Corporate Transparency Act, and it's a federal law, like you said, passed in 21. We kind of all ignored it because it wasn't effective until 24. Which is now what everyone's facing down. But the basic idea is traditionally there has been no federal central database. If someone wanted to look up who owns an entity, so let's say someone wants to figure out who owns Adam Sweet LLC in Montana, there was no way to look into a federal database to figure out who owns that entity. You'd actually have to go to Montana Department of State or whatever the relevant state authority was to figure out who owns what. And then the other issue is that many states make it pretty easy to disguise ownership. And disguise, I don't put that in the pejorative sense, right? There's good reasons. Sometimes people have trusts in between or whatever, but it's hard to figure out what individuals actually own an entity. So the idea of the CTA was to force disclosure on a national level of entities, and then also ultimately the individuals that own entities. That's the basic genesis of the law.
Okay. So who is it for? Because it talks about the beneficiaries of those. Specifically, are we talking what type of corporates? I know LLC is where a lot of entities are in, but is there anything else besides LLCs that are part of that?
Yeah, good question. So it's any, I think the way that the statute is worded is any entity that's basically formed by filing a piece of paper with the state. So that's going to be an LLC, an LP, a corporation, an S corporation, certain trusts. Some trusts, I think you don't actually have to file articles of not incorporation, but you don't have to file paperwork with the state. But if you're having to file paperwork with the state, then suffice to say, probably your entity is subject to these rules.
Yeah, and that's what I'd heard too, is that if you have to file something with the state, you're probably subjected to this. But then inside of that, so the beneficiaries inside of that, explain the detail of that and who essentially, for example, in my case, my wife and I are both 50% shareholders of our LLC, and each of us, I'm understanding, would need to file.
Correct. There's kind of two different broad categories. So the term they use is beneficial ownership information, or BOI, and two different ways that you can have to have. Not every owner has to be disclosed, but if you own more than 25% of an entity, or if you exercise substantial control, and substantial control could be board of directors, or you're the CEO of an entity, or you're the manager of the entity, but it's an either or. So 25% or more, Or if you have substantial control over the entity, then your name will need to be disclosed as part of these filings. So yeah, in your case, we have lots of clients that are just a pretty simple husband-wife partnership, and they don't really think too much about this. And then it turns out that in fact they have a filing obligation, and both husband and wife their names and driver's license will have to be uploaded and disclosed in the system.
Yeah. Okay. So let's talk about that form or filling that out. That can be done online. And it is quite simple, but the one hang up that I had was getting to whether or not there's an acronym. FinCEN is kind of, I think, how you guys refer to it as, but it's the Financial Crimes Enforcement Network. And that's where, when I was filling it out, I'm like, oh, do I need to do that? Do I not need to do that? Explain the process of filling that out, because it is relatively simple.
Yeah, so I think, and we are not, I should be clear too, we're kind of just in an advisory role. This isn't related to any kind of tax filings. So we are not doing this on behalf of clients, but we have lots of clients affected. So we're trying to file general information. But I think there are two ways to do it. You can disclose your own social security number, driver's license number, et cetera. Or I think under certain circumstances, you can also get a FinCEN identifier and use that to identify yourself. Okay. But I think the way for most, like as you described, a husband-wife LLC, I would bet you're not going to be using that FinCEN identifier. Instead, you're going to be using your own unique identifying number, which could be driver's license number, social security number, et cetera.
Yeah. And the form is relatively quick to fill out, right?
It is. We've heard from clients that, I mean, it can be really just a couple of minutes. I mean, maybe one example, my parents did it. They have an LLC, and I think my mom had to get the driver's license there were 4 members, including my mom and my dad and their partners. And I think it took once they got copies of the driver's license from everyone, I think it took a couple of minutes to do the filing. Mm-hmm. And then once you do your filing, you're not going to have to do anything again unless something changes. So if you're in a static situation, you will not have to be doing your filing again next year.
Okay, that was just what I was going to ask. This isn't an annual deal. It's a one-time deal to get your information in.
Correct. Unless something changes, like if you get new ownership or you sell or et cetera, then you'd have to do a new filing. But if nothing changes, then it's going to be just a one and done deal.
Okay. Now, real quick, and we kind of jumped into the filling it out, and I don't know if we talked about this, but there is some, if you started your LLC before and after a certain date, kind of hit that real quick.
Yeah. So and I should say too, not everyone. There are a couple of very large exemptions. So if you're a bank, if you're a governmental entity, if you're tax exempt, if you're nonprofit, you're not subject to these rules. Also, if you're a large, quote unquote, large reporting company or large operating company, I think is the term. And that's defined if you have more than 20 full-time employees and more than 5 million in gross receipts, you don't have to do any of these filings. So I should point that out sorry, Justin, to your question. Yeah. So if you were an entity in existence before 24, you have until the end of this year to do your filings. If you formed a brand new entity during 24, you have 90 days to do your filings. So a lot of people probably are late, not intentionally so, but probably because they're just not even aware of the obligation. And the 90-day thing is a special rule just for this year. Next year, if you file a new entity or create a new entity, you'll only have 30 days to do so that's the 90 days is a special grace period this year, but next year it'll be 30 days.
Okay. What's the penalty?
Well, so they say penalties are up to $500 a day if it's non-willful. And I think if it's willful, it could be up to $10,000 a day. I think we're hopeful. We have not seen any penalties yet. We're hopeful that the government's going to be lenient with this, at least for the first couple of years, because most people just aren't even aware of this, or they vaguely heard about it. So hopefully, if people are late, hopefully there isn't a penalty asserted. And if there is a penalty asserted, hopefully there'll be some reasonable cause arguments you can make to get the penalty waived.
Okay. Now, let's, as we wrap up our conversation, let's hit something that is just literally breaking as we are having our conversation in some ways, and that is some litigation that's out there regarding injunctions.
Yeah, so the big critique of the CTA, that you might say, why is the federal government doing this? It was part of an anti-terrorism, anti-money laundering act from a couple of years ago, meaning that there's a perception that people can use shell companies in the U.S. for nefarious purposes. Most of our clients, all of our clients, have no involvement with that. And so the critique of this is it's a pretty overbearing federal statute that you're requiring millions and millions and millions of entities to register, incur the cost, and to disclose all this information to the government, when who knows what the government's really after. So there's been several different lawsuits challenging this as basically being an unconstitutional overreach of federal authority. There was one lawsuit earlier this year that was specific to certain businesses in a trade group, but just this week, there was a national injunction issued by a district court judge down in Texas against the CTA. And if you read that injunction, literally what it says is no one right now has to comply. It's a temporary injunction, but if you read it literally, it says no one right now has to comply with the CTA.
But probably to be safe and sorry on the deal, do it.
Absolutely. So I would say there are certainly some people that have read this injunction and are pretty bullish. They're sending articles out saying you don't have to file. I probably would err on the side of caution. Now, I'm just a cautious person, right?
Yeah.
But I would probably err on the side of caution that it's a temporary injunction. The government's going to appeal the ruling. It could be lifted. So if you have a CTA filing obligation, myself, I might err on the side of caution and do your filings by the end of this year, and then see what happens with the litigation. But there are certainly other people that have a difference of opinion, and you may hear more bullish guidance from them.
And I think, too, it's one thing to note that, our conversation here today is not structured as advice for you to take, because they need to, meet with their own accountant, their own tax attorney on this, and then make a decision on that.
100%. And what we tell clients, if clients really have specific questions, we consider it a legal matter. It's not really a tax matter. It's not us as a CPA firm. It's outside our purview. Mm-hmm. So if you have questions on the injunction or questions on whether you should be doing this filing, I think it's a question for an attorney, ultimately.
Well, Adam, very clear information there. I appreciate you taking the time to do this. I know you're on the road. And am I correct in saying that you guys did do a webinar on this? Was it recorded to where people, if they want to go and listen to it, they could?
Yeah, we've done a couple of webinars and we have a couple articles. So I think if you just Google, I should have probably a site, but Google Eide Bailly, EIDE BAILLY, Eide Bailly in Corporate Transparency Act. If you Google those two things, hopefully some resources will come up. We have a couple of good articles that are just general topical. And then we just recently hosted a 1-hour webinar where we tried to address kind of common questions our clients are having.
Okay. All right, Adam. Well, thanks for doing that. Appreciate the information here today.
Justin, thanks for hosting us and thanks for having me.
You bet. And again, if you want to find out more information, you want to go and watch their webinar or the information that they have out there, as Adam said, you can go to their website at eidebailly.com and find out more information on the Corporate Transparency Act. And if anything unravels with that or is changing, we'll be sure to update you here on the Working Ranch Radio Show as well. Stay with us. Coming up after the break, the Captain Tim O'Byrne, editor of Working Ranch Magazine, is in for this week's edition of Tim's 2 Cents, and we'll hear from meteorologist Don Day with a look at our long-term weather.
Fascinated by our wild weather? Now you can learn, appreciate, and understand the weather in your own backyard with the new Tropo Rain Gauge. Having achieved the highest rating of any product reviewed by the weatherstationexperts.com, the Tropo boasts rugged durability, impeccable accuracy, and precision to the 100th of an inch. Visit measurerain.com to order a Tropo today and use code RAINDAY. That's RAINDAY for free shipping and 10% off. Go to measurerain.com.
Hey, Justin. Hey, everybody out there in Working Ranch Radio Land. Item 1, they found a screwworm-infested critter down in Mexico, and that caused the border between Mexico and the United States for live cattle to be shut down on November 22nd. So that's interesting. I remember doctoring for screwworms in northern Nevada when I was working those big outfits back in the 80s, and we'd have a paint can with some blue goop in it. We'd paint on the cut sacks as we let the calves up. So I hope to get that under control. Second item here is from the LA Times by Leela Seidman. Pair of new wolf packs found in California. Wolves are continuing to make a California comeback. state wildlife officials have confirmed the presence of 2 new gray wolf packs in Northern California and estimate there are now at least 70 of the endangered apex predators roaming the state, up from 44 documented last year. That's interesting. So folks in California, cock your hammer, and I hope things go well for you. Back to you in the booth, Justin.
All right, thanks, Captain, and appreciate that update there on a couple different topics that are important to us here in ranching. Well, as we turn now and take a look at our long-term weather, joining us as he does each and every week is meteorologist Don Day. And Don, again, thanks for joining us here today. So when we look out for the next 7 to 10 days out, I know this coming week, as we have really been talking for the last 3 or 4 weeks, as we just continue to see a little bit more active winter weather type pattern. And as we look into this coming week and even a little bit further out into that, definitely seeing that, and almost like, as I was telling you, kind of appears like that I-70 corridor and north, maybe a little bit south of there, but from there up is where the active wet winter weather is going to be, whereas the southern part of the country may be going to get some reprieve from that cold, severe weather.
Yeah, so what the desert Southwest, the Southern Rockies, and the Southern Plains back into probably the Southern Great Basin, including Southern Nevada, as you get into California, there is not going to see much weather. We are going to see most of the weather over the next week to 10 days, as you pointed out, north of that I-70 corridor, especially the I-90 corridor. We'll start to see the Pacific Northwest and the Northern Rockies get back into it, out across the Northern Plains. And there is going to be 1 or 2 more shots of Arctic air into the Great Lakes in the Northeast between now and the middle of next week. So there's some reprieve coming, but there's also going to be a higher frequency of fronts and systems moving across North America over the next 2 or 3 weeks leading up to Christmas time. So things are going to get more busy coast to coast, favoring those northern areas. Okay.
Now, and you had also mentioned that there's some new European data coming out in the weather models there that looks a little bit further out into that. What are you finding from that data?
Yeah, pretty interesting. So around the first of the month, we get the new data sets that go out monthly for the next 6 months from the Canadian model. And on the 5th of the month, we get the new data set from the European Center. And 2 things that are coming out from both of those models is that there is a shift in the semi-permanent high-pressure ridge, which wants to be over Western North America right now, has it retrograding into the north central Pacific. And this is something that we've talked about in earlier discussions, Justin, is that as we get into the more mature part of winter, if we get that north central Pacific high pressure ridge to set up, that directs a lot of cold into Canada and eventually a lot of cold into parts of the north central and northeastern United States and parts of the northwest parts of the U.S. And both the Canadian and the European models are suggesting that the high pressure ridge in December that's going to want to be along the West Coast goes further west. And if with both of those in agreement, our confidence of what we've talked about, which is a colder pattern setting up late December, January, and February for Canada and the northern tier of the U.S., well, that seems to support that.
Okay.
Really does look like around or after the first of the year, folks in the northern plains, northern Rockies, Great Lakes, northeast United States should be ready for some pretty cold weather.
How far is that going to be to the west of the Continental Divide? Or will it be there?
Yeah, that's the trick, because that Continental Divide is a very effective barrier to deflect a lot of those cold air masses from dropping further to the west of the divide. And that's always a really tough call. From what we're seeing, I think the most persistent cold will be east of the Rockies, where you'll get these cold air masses that will butt up to the divide, and then spilling over the divide is certainly on the table. But I think the most persistent cold is going to likely be, let's say from the Continental Divide from Montana to the northern half of Wyoming, across the Dakotas, and into Minnesota, Wisconsin, and the Great Lakes. But occasionally what you'll see are some of those Arctic fronts pushing further south, reaching far. You can see these fronts go all the way down into Texas and the Gulf Coast region as you get into that mature part of winter, which is January and February.
Okay. All right. Appreciate the input on that and look forward to talking to you next week.
Sounds good.
And if you want to stay informed during these winter months and this holiday travel season and what the weather's doing across the country, I encourage you to check out Don's YouTube channel. You can find the link to that by going to his website at dayweather.com. For the next 3 episodes, as we finish out the year, we'll be featuring segments from the top 10 shows of 2024, working from 10 all the way down to 1, so be sure to tune in and join us for that. The Working Ranch Radio Show is a production of Working Ranch Magazine, branded #1 by America's Ranchers. I'm Justin Mills, and until next time, keep your chin down and your mind in the middle. So long.